Assalamu alaikum ji, welcome to SIA Conversations. As you know, SIA Conversations is trying to understand the economic narrative of Pakistan. We try and get the best people and we argue with them, we fight with them, and we try and see if we can get you to understand what the economic narrative of Pakistan is and why Pakistan is not going anywhere. And quite frankly, my lament is that Pakistani economists have been marginalized. They're never in the government. They're never consulted. The research doesn't matter. But partly it's Pakistani economists to blame because they don't really say much that matters. So I think we also have to challenge ourselves, we economists, to make you understand what we are saying and why we are saying it, and we have to make it granular. So that is the whole purpose of this podcast, and that's why I do it. Today, I'm very happy to say that I've got somebody very special with me. I've got Dr. Ihtisham Ahmed. Ihtisham is very well known in the international world. He's one of our finest economists that Pakistan has produced. He is a very well known and a much in demand economist who deals with tax, fiscal decentralization, fiscal issues, large number of fiscal issues. In fact, I would say he's one of the leading experts on fiscal matters in the world. So it's a pleasure to talk to Ihtisham, pleasure to learn from him. He has been at Cambridge, at Sussex, at the IMF, at London School of Economics. He's currently associate professor in the London School of Economics. He's been in Chinese universities. He's had a lot of affiliations, and also because he's my age. So yes, of course, he's had a lot of experience, but he's distinguished himself everywhere. And that's the reason to talk to him. So I must also add that he was one of the architects of the value added tax in Pakistan, which is the GST here. And he will share with you how what he designed, what he talked about, and how it was not fully implemented. And he's frustrated with that, of course, and as he should be, and why it was not implemented, and why the value added tax is so important, and why we should really try and put that thing in place. And I would also throw another ball at him. Ihtisham, our tax policy is so pathetic. I think we have the tax policy, we have kind of outdone the Sheriff of Nottingham. We tax everything in sight. We have 10,000 withholding taxes. I exaggerate, but not by much. I think 50 or 7% of our revenue is collected through withholding taxes, which they never mean to adjust. So some of these taxes are supposed to be returned to people, but they're never returned. For example, a lot of these poor people have cell phones and they pay withholding income tax on those cell phones, and they're never refunded. If anybody asks for a refund, he's treated badly. And the poor people don't even know how to get a refund. Electricity bill also has a withholding tax. And then there are tax upon tax upon tax. There's sort of finally they ran out of names, and on the electricity bill they have a tax called other tax. Now, you please tell me what an other tax is. So please comment on our tax system too. So Ihtisham, over to you. Ihtisham is going to give us a short presentation, then we'll have a conversation.
Thank you, Nadeem. Assalamu alaikum, people. Nadeem and I go back a very long time. I think we were in the same class when we were 9-year-olds, and we seem to have been chasing each other and having fights about everything under the sun, including the tax regimes. But it
That's
turns
the
out
best.
that
Ihtisham, I might add, that's the best kind of friendship to have. I feel very, very
but
blessed
let me
that I
add
could
that
have. Go ahead.
the fight is more superficial
Yeah.
than real, because I actually agree with a lot of the critiques of Nadeem, and I will explain why that is the case. And tell you a little bit about how I got into this area. But let me first add that to correct two issues. One, that I had been actually involved with policy making in Pakistan. Once I was requested by my former student, Dr. Shamshad Akhtar, to represent us at the IMF board, and that was in 2008 after I left the IMF staff. And the idea was to help fix the tax system and get a huge loan, which I managed to do, but I did not manage to fix the tax system. Explain why. Secondly, I actually did make a recommendation, and indeed, Lord Stern and I were the only foreigners. I mean, I was not a foreigner to be invited to make a presentation to the Kamrul Islam Tax Reform Commission, 1985. Kamrul Islam made a point not to invite either the IMF or the World Bank, but because we were academics, he listened to us. We did make a case for the VAT, but he did not think it was the right time. He accepted many of our other recommendations. But the VAT that was GST that was put in place in Pakistan is not something I designed. It's not something I would have condoned. It was not really a GST at all. It's basically a system of withholdings and production excises that has none of the benefits of the GST, but a lot of the costs. And my idea in joining the Pakistan team, negotiating team, 2008, was that I might be able to help fix this, given that I have a fair amount of experience in doing this from China to Mexico to the Gulf states to Russia, and many, many parts of the world in my IMF career and as an academic. But it became clear to me that it was not going to happen, and I quit within the year. And I came back briefly to help Nadeem and Hafiz Sheikh, but they couldn't fix it either. So I'll talk a bit about why that is the case. Why is it that other countries have been able to carry out major, major tax reforms, including across the border uh, in India and China, which did not even have a tax system in 1992, 93 when we helped them. Why is it that they have been able to pick up a tax system, run with it, and make it the basis for sustainable development? And we have not. And I think this goes back to partly to our history. And unfortunately, economists don't take history seriously, and they must. Let me see if I can share my desktop. Sure, let's see. It's not working. Nadeem, I'll just speak to it.
Okay, fair.
We should have done this earlier, but I guess so. Really, I think what Pakistan finds itself today is becoming much
Try
more.
again. I have made you a co-host, so try again if it works. Let's see.
I think the problem is at my end.
Okay. Okay, no problem. No, doesn't matter. Go ahead.
Yeah, the problem is at my end. I needed to,
Okay, no
although
problem.
it
Go ahead.
worked recently. Let me just say that Pakistan has made a major contribution to the Middle East recently, and the question that arises is: can Pakistan become a Prussia? The Prussia was a buffer state between Russia and the European powers. But it became, the engine for Central Europe. Can Pakistan make that transition, leverage geographic advantage? But Pakistan was designed as a buffer state, and I think this is something that we do not really fully appreciate. And the one person who understood this and argued for really a resilient and independent polity was Allama Iqbal. Unfortunately, most of his economic writings are in Farsi, which most of us do not understand. Although for the 2010 uh, Society of Pakistan Economists, I was asked to give the Allama Iqbal lecture together with my wife, who's a Persian scholar. We translated Allama Iqbal's relevant poetry in terms of what it meant for governance in economics. And from the Siyasat-e-Hazir, which was written in about 1922, early 1920s, he makes a very strong statement that be careful about international recommendations. and independent policies and pro-democracy policies that are coming out of the international agencies, because they're really binding the dispossessed and blinding people and maintaining dominance in the garb of democracy, and that it's impossible to develop in this environment. That was very, very strong message. And, we have periodically wanted to break the begging bowl, but have not been able to do so. So we teeter on default and keep going back to the IMF. Why are we going back to the IMF every time there is a program? It lapses and you're back again. Habitual borrower, as the IMF called it. So what's the root cause of this malaise? And I think the issue really is very deep. But before we get to that, let me just make a comment on theory and analytics. How I came to work on this issue was that after my PhD, I was invited to work on a project on applying modern public economics to emerging market countries. This built on the seminal work by Peter Diamond and Jim Merlis. And remember, both of these are Nobel Prize winners. And, and Jim Merlis spent a lot of time in Pakistan and helped the PIDE in the 1960s. Nadeem might remember. So they were very dissatisfied with the then rules of thumb approach to revenues. Revenue only, get it however means you want. Uniform tariffs, raise the tariffs, it's revenues. And the argument, which actually goes back to Ramsey rules of the 1920s, which they formalized and developed, was that you also need not just revenues, but you need production efficiency, and you need to focus on income distribution. And you need to think about externalities, and these all have to be done together. So this whole focus on revenues, however way you want, is wrong. And I think Nadeem is absolutely right in that. Although we have disagreed about revenues, I think there is 100% agreement in that what we have been doing is completely wrong. And then, of course, in 1980, there was a seminal book by Joe Stiglitz, another Nobel Prize winner, and my PhD examiner, Sir Tony Atkinson, on public economics. And that was the basis for thinking about, well, does this actually apply to developing countries? And Lord Stern got money for initial work on India, and I was hired in that context to work as an enemy alien to work on India. Surprise, surprise. But that was, by the way, the most interesting and I think most productive period in my entire career. It's an enemy alien. Because we actually got something done. And very quickly, we thought that we could extend the models and look at how other parts of the world and other countries, the same tradition, have performed. And we thought about Mexico, which had actually carried out a VAT. And that carried out a VAT by suppressing 80 to 300 local and state taxes. So basically, VAT was a process of centralizing revenues. And Pakistan.
Now, but Hisham, just one minute. Let's sort of kind of backtrack a little. You packed in a lot of stuff there. Let me just simply ask you, what would you say are the principles of tax policy? We must begin with some principles, because here the principles are
that's exactly right. That's what I said.
So explain that in a little detail.
Revenue, it's production efficiency. You're looking at the production, exports, raising employment, etc., and income distribution plus externalities, and these have to be done together. And unfortunately,
now, tell me, please explain externalities for our audience, please.
Externalities are when, for example, with climate change or a pandemic. It's not just what happens in a district that matters. It's what happens in other districts.
Right.
Therefore, focus on health being completely decentralized to districts is wrong. So you have to be looking at the cross effects across other districts. And
Mm,
you have to look at what happens when you have a shock. When you have a
mm,
shock, you
mm,
use local information, but then you need to have national coordination and national co-financing. And those
mm,
are issues of how policy comes together to address externalities.
mm,
Then you get externalities in production, you get externalities in, as I said, the prime externalities these days uh, are climate, and
mm,
Pakistan is very, very vulnerable in that regard.
mm, mm.
And of course, trade shocks. We're sitting in the middle of, and also you get externalities and feedback effects from, the breakdown
Mm,
of the neoliberal market fundamentalist order, and
mm.
you're back into the neo-mercantilism of the 1800s, where might is
So,
right.
so let me just interject here. Tell me, like as I said, we have a huge number of tax handles,
Yeah.
right?
I'll come back to
We
Pakistan in a
use,
minute.
uh,
Let me come
but I
back
mean,
to this.
I'm trying to say, what is the experience in the world? How many tax handles do people have? How many should they
Yeah,
have?
I mean,
That kind of
I'm
thing.
not going to enter into a theoretical discussion.
Okay.
Because different countries
Mm,
vary,
okay.
but there has been a shift, particularly
Mm,
with digital transformation,
mm,
for wide area taxes to be run at a national level.
mhm,
And the wide area tax is principally the value added tax, and I'll tell you why that has to be done at the national level.
mm,
Uh, and it has much to do with externalities of information management. The value
mm,
added tax does not only generate revenues, or should
mm,
not be thought of as generating revenues, but also generates information
mm,
and is the basis for a completely new approach
mm,
to the income taxes, because value add is wages and
mm,
profits.
mm.
So when you have full wage information, you've got full profit information on the value chain, you have key elements of your direct taxes. And if you
Right,
don't have those, you can't actually implement an income tax.
right.
Then you're doing the stupid things we are in Pakistan.
Mm,
So really why we took Pakistan in the first place was that in at the time of independence,
mm,
Pakistan had no money.
mm, mm.
And Jinnah was forced to borrow from Habib to run the country.
Yeah.
Yeah,
Mm,
you know that story. And the first thing they did
mm,
was to take this sales tax, which was a provincial tax under the Government of India Act 1935, and centralized it. That had problems in political economy terms because the money they gave back, particularly to East Pakistan, was less than what they took.
mm, mm,
But that was the only way they could finance it. And the reason we thought that would be an
mm,
advantage is that that's then the basis for a modern value added tax.
mm,
And
mm,
India didn't have that
mm,
in 1981, 80, 81. So we thought that
mm,
Pakistan really could be a good example. And the recommendations we made to the Kamrul Islam Committee, which
mm,
they acknowledged, but the report is very useful. People have not really read it or
mm,
understood,
mm,
talking about how you cannot look at one tax in isolation. You have to look at all taxes together and then the administration in conjunction with your tax framework. And that's exactly right. And it's never done in Pakistan. You treat tax administration separately and you run around doing, withholding taxes left, right, and center. So that's why we extended to Pakistan. Now, in the 1973 Constitution, services were assigned to the provinces because then Bhutto had no idea of the VAT. And he thought the services would be haircuts. And, business to consumer transaction actually don't matter for this information story. And, it was fine as far as that was concerned. But it is a big constraint today.
mm,
So let me go back to the historical, background. As you recall, the British uh, were involved in a great game with the Tsars and had been beaten a couple of times in Afghanistan and they were playing great game with the Tsars, and they were worried that the Russians were knocking on the doors of the Indian Empire. So it was an excellent seminar that you had done with our friend Imran Ali. And what the British had done, and I think he brings this out beautifully, is that the west bank of the Indus, which was Banjar land at the time, was developed. Huge investment in canals, in transportation, in railways, in roads. So basically, and then bringing in people, and of course also jagirdars and landlords who would be loyal to the British. So they were creating a class of landed gentry who would be more loyal to the British than the British to do three things. One is, of course, to create the buffer. Secondly, is to provide food for the British Army. And thirdly, cannon fodder. So, a number of people from the Punjab killed in the First World War is cannon fodder for the British. So, that's what they were doing. They're creating buffer along the bank of the Indus. When it became clear that they had to leave India after the First World War, the extraction of rents from India to Whitehall had reversed, and in Britain had borrowed from the government of India during the First World War, and the transfers are going in the opposite direction from Whitehall to India House. So the extraction of rents from India had stopped. And then there was, of course, also the independence movement. And after Jallianwala Bagh and the massacre by General Dwyer, it became clear they could not hold India by force. Could not hold India by force. So what did they do? First thing they did, even in the 1920s, was to take Aden out of the British Empire. Why? Because they're protecting their trade routes for their empire. Then they took out Burma, then they partitioned Bengal. Then when it became clear that they had to have an independent India, they wanted it to be controlled behind the scenes by the British. So the Cabinet Commission confederation model would have been a way to control India with a weak center. And Nehru saw that immediately. And after agreeing, Jinnah also came around to the same view. But then it became clear that they were leaving. And in April of 1947, they removed the crucial states from India. What are the crucial states? UAE, Qatar, Kuwait, Oman. Those were part of the British Empire. So they were maintaining control of the oil, maintaining control of the trade, and they wanted a weak buffer. 1947, you have a moth-eaten Pakistan, which Jinnah accepted because he was dying and couldn't wait. Nehru accepted for the same reason. He needed to get them out. And you had a moth-eaten Pakistan with no revenues, and Radcliffe sent in to make things even worse. So the boundary dispensation was hugely unfavorable to Pakistan. Hugely unfavorable, as we all know that. So you had basically a buffer state which was created, which was likely to maintain dependence on the British. Now, one of the key things that I would like to focus on, and it's something which should be given a lot more attention, is how the Government of India Act of 1935 continues to play a role in Pakistani constitutions. You know, constitution after constitution replicates Government of India Act 1935.
Yeah, they're married to it.
What was the Government of India Act 1935? They had done this because the British had allowed elections in the provinces. And how do you govern provinces run by natives? Is to make them dependent, and hugely dependent. So what did they do? On the spending side, every key item was split. Every key item. And you had the shared list, you had the independent list, and you had the central list. And on the revenue side, again, they maintained a split to protect British interests. How do you do that? You control trade, so import duties kept in the center. You protect production, so excises on production are kept by the center. So normally excises are at the local level, remember, nationally, internationally. So they kept excises, they kept the trade taxes, and they kept taxes on individuals and companies, as corporate and personal, so that the natives would not tax British interests or British individuals. So they were given land, agriculture, and uh, and the final point sales tax, which is produced no revenue. But what happened after 1935, I think is very interesting, is that you remember that the land revenues were the major source of finance for the Mughal Empire, and continued to be in British India, 8% of GDP. If you look at Dharma Kumar's Cambridge Economic History of India, until 1935, at which point it collapsed. Why? Because you had these landlords who were newly elected. They were not going to tax themselves, which is fine by the British, because then it meant that the provinces remained dependent on transfers from the crown. So you had a dependent aristocracy. The dependency was accentuated with the transfers from the crown, and that's a revenue sharing system. That's what you have with your current finance commission, the revenue sharing. It's a system of transfers. So a key element of accountability in multi-level finance is some clarity on what you spend and own source revenues. And own source revenues are not transfers and shared revenues. It's what you tax yourself at the local and provincial level. And there are no taxes at the effective taxes at the national or provincial level that create this link between what you spend and how you finance it. So you really ended up with dependent provinces, dependent districts, unable to make decisions other than how much more do you extract from the center. But they don't even have the right instruments. So, together with you have a broken tax policy framework right from the beginning. And that's what you go back to in the 73 Constitution and double down on with the 18th Amendment. 18th Amendment brings the Constitution back to Government of India Act 1935. So you've got split administrations where you don't need it, which adds to the cost of doing business. And then you don't raise revenues and you go around taxing everything under the sun. And remember that every withholding tax for the GST is disastrous because it breaks the information chain. It may lead to short-term revenue generation, but it doesn't even do that. It completely negates the principle of production efficiency, reducing the cost of doing business, reducing the cost of exports, and generating information, and raising revenues. It does none of the above. So we don't actually have a GST. What we have is a system of production excises that continue to be applied in the colonial mode. So, and that, of course, is very nice for the tax administrators because it brings them closer to the taxpayers. And, as Kamrul Islam said in 1985, then CBR was the most corrupt of Pakistani institutions. Most corrupt in 1985, and he did nothing compared to what has happened since. And he did say, and the World Bank IMF report should have read the Kamrul Islam report. He made a distinction between corruption and smuggling. And he said they're related, but they're not the same. So, and that's a very important point that people need to take into account. Corruption is on the part of tax administrators and taxpayers. They collude, that's corruption. The rent seeking that comes about through smuggling, which is due to price differentials, is completely different. One has to understand that, and unfortunately, the World Bank IMF people did not, and just focusing on federal uh, assignments is nonsense. So they had no clue as to what causes corruption, why there is a system of vested interests in Pakistan, how it continues, how that great game continues. And the Qamar Islam made very important recommendations. Uh, but the during the Afghan War, the first Afghan War, money started flowing in. Mahbub ul Haq was removed as finance minister, and that was the end of the story. They didn't have any interest. Now nobody can find the Qamar Islam report, by the way. I gave a
Yeah.
seminar, FBR, you were there, 2019. FBR, there were 250 people from the Ministry of Finance, from Planning Commission, your people, FBR itself. Nobody had heard of the Qamar Islam report. And I
I've been
told,
trying, Etisham, I've been trying to look for it. It's not available locally. So if you have a copy, do send it to me.
I do have a copy, but I'm not parting with
Okay.
it.
No, no.
It's a
Okay.
hard copy.
Do you have a PDF?
No, I don't have a PDF. But
Okay.
anyway, the story is that they could not find it. I told the chairman, FBR, to look for it in his library or send people to the Planning Commission library. They couldn't find it. And then I said, is there any way I can help you? And he said, no. He said, thank you very much. Since you know everything,
But
why should I waste my time?
let's be fair.
Okay, let me
We've had the
let me go
World
back.
Bank, we'd have the World Bank doing the tax reform for the last, I think, 10
Yeah,
years or something. And they've had
I
three
think
or four projects. And now we've got
huge.
McKinsey's there too, plus the World Bank, plus the ADB, plus FCDO.
Now, I think what we have had is very poor advice since the 1980s and maybe 1990s from the market fundamentalist approach of the World Bank
Hmm.
and the other international and bilateral agencies.
Hmm.
So complete ignorance of the political economy constraints, or they pretend to talk about political economy. They really don't understand it.
Hmm.
And really what you have to do is to think about who does what, how it's financed, and bring in uncertainty and climate shocks.
Hmm.
It does, and Allama Iqbal's warning, don't leave it to the international agencies. You have to do this yourself, for heaven's sakes. Listen to Allama Iqbal.
Hmm.
So really what you have, as I said, I mean, the reason I spent a little bit of time is on the historical background. The Government of India Act, there's no mention of Government of India Act 1935 in the World Bank report. That's the cause of a lot of the problems. The rent seeking and dependency. You can't do an analysis of corruption and rent seeking without looking at the underlying constitutional problems. There's not even a mention of it. So it's basically in the, seeds of failure were in the, although the centralization of the final point sales tax was needed perforce in 1947 and could have been improved. And indeed, I think Musharraf tried to do it by allowing the monies to be given back to the provinces, but keeping a central tax administration. But that's been completely reversed. Uh, and of course, the Raisman Revenue Sharing Award, which gave back very little to particularly to Bengal, and laid the seeds of the dissolution of the country. So you have to look at assignments, financing, and these two are linked, but not in the normative US models. And these normative US models have been used by our economists. They go to US schools. They come back and they think they can apply US models in India or Pakistan or China, and it doesn't work. And really, what you're doing is that you have geographic rents and elite capture, but this is under stress. And why is Pakistan the repeated offender for the IMF, the worst offender? Is because you have not looked carefully at the assignments that are necessary. I think the one issue that Pakistan actually did well was addressing the COVID crisis. And they used what's known as the Sendai principle, which, by the way, is against the 18th Amendment. They used the local information to identify need and then brought in the army for logistics and information management. And you provided the financing from the center, co-financing. So that's how a multi-level system adapting to shocks works. Local plus central coordination, information, and co-financing. But then you have to make sure that the monies that go to the local governments are not stolen. How do you do that? You need own source revenues, and we don't have that. Now, of course, there is a whole hype, even in Pakistan, about digital transformation going to solve all the problems. It's not going to solve any problem. Let me be clear. Digital transformation not solving any problem unless you solve the policy problems along with it. So you have to think about a new policy framework and then how the possibilities of digital transformation work. I mean, as I said, the reason why China has done so well, and I'll come to that in a minute, is that they have actually thought through what works for them and rejected international advice. I mean, we had a big fight with the World Bank in 1993, where Chinese had run out of money. They didn't have a national tax administration. Their tax GDP ratio collapsed to 10% from 30. And provinces to collect the money and send up half to Beijing. They didn't have enough for themselves, so Beijing was only getting 2% of GDP by 1992. It couldn't do anything. So what do you do? So they came to us in the IMF, and I was assigned to help them. So I worked with them, and we came up with a set of solutions which focused on the revenue side. The World Bank objected and said, no, first decentralize your state-owned enterprises, as we did in Russia, and then think about financing. They said no. And I, through the weight of the IMF behind a team led by Lu Jiwei, who was then head of the economic section of the Cabinet Office, the State Council, Ministry of Finance, and the Tax Administration. And we came up with a plan to fix the hole on the revenue side, at the same time not killing the goose that lays the golden egg. So you want a tax that does not discourage investment, that does not discourage export. And we came up with the value-added tax, but the problem with the value-added tax is that, and they realized it immediately, is that it has to be managed centrally. And they did not have a central tax administration. So in 1993, Jurongji was negotiating with provinces to set up a new tax system and bring in a system of revenue shares and intergovernmental transfers as compensation, so that no province would lose as a result of this reform. So this was what's known in economics as Pareto improving. So everyone gains, no one loses. So the central tax GDP ratio, which was 10%, 93, went up to almost 20% 4 or 5 years later, almost double. Everyone gained. And they did something very, very, very unique. They gave back money to areas that were generating it, so along the coast, for investment purposes. So the big lesson from that is you can't do tax reform on its own. So big tax reform has to generates gainers and losers. And it's gainers and losers amongst jurisdictions. And you have to offset the gainers and losers in a way that does not create dependency. That's what Chinese did absolutely brilliantly. It's something that, it's a lesson then I continued to work with the Chinese on various aspects of fiscal reform whilst I was in the IMF and subsequently. After I left the IMF staff at the end of 2008 and then the IMF in 2010, I continued work on China and on Mexico. And really what I took was a lesson from China, which we applied in Mexico. In Mexico, they were looking at fixing cheating. How do you fix cheating? And the cheating comes about, and people thought, I mean, my colleagues in the IMF think that only the small taxpayers cheat. That wasn't the case. We had access to information from the tax administration and the economic census, and we found that everybody was cheating, especially the large taxpayers. And you do that by hiding transactions. So the moment you raise your thresholds, you break the value chain. And that's what was happening. And we keep recommending raise the threshold to the VAT and income taxes. So you break the value chain, and that enables large firms to transact with smaller firms who are cheating. So really, I think what we have is a very good example of how to address cheating plus raising revenues and improving efficiency. The then two administrations in Mexico understood this issue, dropped the threshold effectively to zero, integrated small taxpayers into the large taxpayer. They still maintain the small taxpayer unit, but the value chain flows were seamless. So once you do that, then it's in the interest of a small taxpayer or shopkeeper to join the system. If your shopkeeper is subject to a lump sum tax, it's got zero incentive to join the system, is what you have in Pakistan. I tried to tell that to the chairman of FBR in 2019. He didn't understand it. So you need to get the value chain to get the interest of the small taxpayer, including your shopkeepers. Why is it that in every country, small taxpayers want to be in the VAT system, not in Pakistan? And in Pakistan, everyone wants an exemption. Now, what an exemption does in a VAT is terrible because it means that all the taxes on your inputs are then in your cost of production. You cannot offset them on the tax against your input. So you build in cost differentials that become very hard to export. And if you give export refunds based on some sort of ad hoc calculations, huge opportunity for cheating. You see this in the textile sector. So then you take the whole sector out of the VAT, and it's absurd. You want the VAT to be integrated. Now, what the Chinese did is very interesting. We did this reform in Mexico in 2013. Chinese did exactly the same in 2015, and they integrated the taxes on services and also local business taxes into the VAT. By doing that, they created a full value chain, and then they removed the boundaries around the special economic zones. The idea was to use the special economic zone, the investment that you make in Shenzhen and in the Yangtze River corridor, and then encourage linkages with the rest of the economy. So then it doesn't matter where you source from, because when you export, you get the money back. And that's what they've done. So you create the whole country becomes a special economic zone. What we're
You're
doing,
blanking out. What's happening?
we are creating islands, special economic zones for the Chinese. What is the benefit to us apart from the liabilities that are building up? So really what you want is the domestic linkages. You can't have that unless you have the full VAT. We don't understand the full VAT in Pakistan. We don't even understand the VAT after 40 years of implementation. It's not a VAT. What we have is a system of production excise, and everyone wants an exemption. Why? Because you see the tax is basically a tax on your cost of production, which it should not be. So you end up with something called VAT, which it's not. It's a system of production excises. It hurts production, it hurts employment, it hurts exports, it doesn't raise revenues. Might as well abolish it. Start again. So really, I mean, that's where what you call a VAT is not really a VAT. So let's get that clear. So, you and I have been talking about VAT and, this discussion, but we're talking at cross purposes. I fully agree that what your problem in Pakistan with the current system, the system called the GST, is not a VAT, and I have the same problem with it. You do not give exemptions under a VAT system because that's terrible. Breaks the value chain. Completely negates the idea of a VAT. That's why I stopped working with the fee share in 2012 with the SRO 293 or 273 on the 1st of April, which gave the FBR the right to bring in any exemption they felt like it. That's just absurd. And no tax policy uh, should allow that. Anyway, that aside, I think what we have a huge problem of understanding what a VAT is. What we have is not VAT. The Indians have finally understood it, but I gave evidence to, 2009, 10 to the Finance Commission, and then, the Empowered Commission took it up, and they realized that, the split VAT, GST that they had wasn't working, adding to the cost of doing business, a nuisance for their taxpayers. And, although they were collecting revenues, it was very inefficiently done. So the Empowered Committee came up with a move to integrating all the state level and national GSTs with a constitutional amendment. At the same time, we had a constitutional amendment going the other way. Now, it wasn't perfect. It wasn't Chinese style, because once the Chinese understood this, they integrated the tax policy framework. Then they came to income taxes. They came to income taxes once they have hit the 20% tax GDP ratio, 20% tax GDP ratio, and before they reduced rates, the VAT alone was generating 11% of GDP, the same rate structure as ours. And don't tell me the Chinese VAT is acting as a disadvantage for exports or production. So once they did that, they were able to move and transition to income taxes because you get full information. And then you use blockchain and information on assets to fill the last gap on the income taxes. But they then integrated all tax administration, one administration in China for all levels of government. Now, they do have a problem, and that is with local taxation. It's something that we've been working on for a number of years, and it's the same problem we have in Pakistan. And the problem essentially is that, we have international agency upon international agency and domestic expert brought, educated in Princeton and Harvard coming back and, regurgitating the US model, ownership valuation model. And it doesn't work. It doesn't work. I mean, I studied at Cambridge, and Cambridge, one of the greats was Alfred Marshall in the 1800s, late 1800s. And his insight, to be honest, is still relevant. And he said talking about property tax, the most upfront tax, and people see it and don't like it. It creates political economy problems. Yeah. And the problem essentially is that when you especially go to the mark-to-market valuation model, you get fixed income people living in potentially valuable areas. You mark-to-market, they kill them, and it stops working. So really, it's a political economy problem, not an information problem. And, the Chinese tried it in Shanghai, Chongqing. The World Bank insisted they do this experiment. It didn't raise any revenues, Shanghai and Chongqing. So they stopped. And then they took the other...
Sham, let's now discuss Pakistan in a little more detail. We're getting short of time. The way I look at it is very simple. Pakistan right now, I've been looking into it. Pakistan is one of the most complex tax systems in the world. I used all kinds of AI to describe it. They looked at it, they told me it's one of the most complex systems in the world. I mean, they've got 30 plus tax handles, and they've got tons of exemptions and tons of this, that, etc. You know better than I. The second thing is that Pakistan also has a tax GDP ratio that compares with Bangladesh and Indonesia, but not with other countries. Now, I have a problem, and we've discussed it often, and the emphasis of donors always has been that we should have a tax GDP ratio equivalent to the OECD countries. I personally think we can't have a tax GDP ratio of the OECD countries because we don't have the same welfare system. They tax 30-40%, but then they return 20% very quickly because it comes back through pension, through health, through various things. Pakistan, nothing is returned. And if we have even 10-15%, I think 10%, I'm quite happy with it. I know you would not be happy with it. So first question. what kind of a tax GDP ratio should we aim for? But related to that, should we aim for a tax GDP ratio? Or should we aim for growth rate? Because right now it seems our old agency, IMF, and the World Bank approach is tax GDP ratio first, then growth.
I tend to take a view that the two go hand in hand. And of course, the 30% odd ratio is absurd for a country in circumstances of Pakistan. Even the Chinese are not going for that. The Chinese went up to 20 and then they brought it down to 17, as counter-cyclical measure by cutting the rates, not destroying their instruments. And what we have is a hugely unnecessarily complex system, totally unnecessary. I mean, you can simplify, and again, the digital tools give you plenty of opportunities to simplify. And again, you need three taxes at the national level, a full VAT, not what we have, or system of production excise, no exemptions. You can keep the rate 15, 16%. You don't need a very high rate. No exemptions. Get rid of all the nuisance taxes. Then you need to give an own source revenue to the provinces and even to the large cities. That is very easy to do. It's very easy to do. And it does not involve creating a separate tax administration. Let them do a piggyback on an integrated income tax.
But here, let me also ask.
It's very hard to do a piggyback on the VAT.
I mean, we are thinking always of increasing revenues. What about expenditures? For example, think about it.
I will come to expenditure. Absolutely, you're right. I mean,
the problem is that the IMF wants to increase revenues and expenditures. For example, egregious expenditures. I'll point out to you. We bought a $30 million plane for the Punjab chief minister. Every minister now has to have a plane. We are buying cars Mercedes and BMWs for officials. You remember Pakistan, you lived here, you know Pakistan as well as I do. You remember in the old days, no official had a car, right? And now even the junior officials, the equivalent of economists in the fund, have a Land Cruiser as well as an escort. So we've got tons of these estimates and agencies. For example, think about it. We are leaking. We are actually hemorrhaging on the energy side. We've got huge, that circular debt. I don't have to recite it to you. We've got huge. I think right now it's standing at 5 trillion, and we already paid 13 trillion in the past. Now, given all that, we have 26 agencies that are looking after the energy sector. Why do we need 26 agencies? I don't know, right? Similarly, we've got so many agencies roaming around that are we've got 70 divisions in the Federation. I mean, why do we need so many divisions?
We can have a separate discussion on this issue, but let me make a couple of points which I think are relevant to this conversation. One is going back to the Government of India Act and beyond. The British created a culture of dependency and lack of hard budget constraints. That's what we have today. Is a culture of dependency. Money is flowing from the sheikhs or your friends across the water. Good times are here again. 1980s, good time, then blow it. Someone else will foot the bill. So there's no hard budget constraint. There's no accountability. There's no accountability. So you need accountability at each level of government. You don't have it at any level of government. So not surprising if one goes and buys a private jet, everyone wants a private jet. And look, heck, by the time the reckoning comes, someone else will pay the bill. So that's, I think, not new. That goes back to the culture for over a century, well over a century. And that's what we have. We don't have an Alarm Iqbal, and we don't have anyone who is capable of breaking it.
But then let me ask you.
I despair. Let me come back to this. So I do think that the tax and spending decisions are jointly determined. You can't separate them. Our spending decisions are off the wall. I mean, who makes them? Look at the budget process. Half of the budget process is regulating and uh, putting a stamp on spending that had not been authorized by Parliament in the previous year. That's just bad budgeting. You should not be able to spend a penny, and the Auditor General should do that. Should be in the budget law if it's not been authorized by Parliament.
Yeah.
Then you need a macro fiscal framework for long-term sustainability. And then, given your spending needs, the revenue needs come out of it, and you get your tax GDP ratio as a result. And clearly, 30% is absurd. The problem, and let me just comment on what's been happening, is that we have recommended to many countries, and we remember we did this in China and Russia and others, is that the tax policy framework in the Ministry of Finance has to be strengthened. It has to be linked to the macro fiscal needs for revenues. It cannot be orthogonal. So they created macro fiscal units and they created tax policy division in Ministry of Finance. It doesn't mean that you don't have tax policy, tax administration. You still need one. Because otherwise you get, and this was, recommendations I had made to the Gus O'Donnell Commission in the UK that integrated the HMRC. So create a tax policy framework in the Treasury, but you retain an ability in HMRC or the tax administration to be able to comment on proposals coming out of the Ministry of Finance. It has to be implementable. So when you make a complete break, you get absurd recommendations coming out Ministry of Finance that cannot be implemented. Like, the expectation digital transformation is going to solve everything. To solve nothing.
But look at this. But another thing.
More concrete over the digital transformation agenda.
But look at the absurd tax targets we fix. We, let's say growth of nominal GDP, we fix far above that as a tax target for the year. And it ain't going to happen. And so then we defeat put in a self-defeating target for the FPR. And then we eventually end up blaming it. And meanwhile, revenues go north. So we don't know. Secondly,
they have not addressed seriously the tax policy lacunae. The problem of the tax policy have not been addressed again and again. How long has it been since Kamrul Islam? 1985. It's now 2026.
No, tax policy got worse over the years. As I told you, tax policy is getting worse all the time. We had recently, 2 years ago, we had a super tax put on everybody. I mean,
you're scratching around in the mud for anything that moves because you don't have a tax policy framework. The VAT does not generate revenues. It acts as a disincentive to investment, adds to your cost of doing exports. Other than that, it creates incentives for rent seeking. Exact opposite of what it should be doing. Just abolish it. Start again. The UAE, when they brought in a VAT, the demand was to bring in a VAT to replace nuisance taxes that added to the cost of doing business.
Yeah. But tell me one thing. Tell me one thing at VAT, for example, why can't we start the VAT? Two questions. Why can't we start the VAT at, let's say, 5%? Let people get used to it first.
Because
if we go to 15 or 20, there's a problem, right? No, Secondly, what do we do about the small trader that everybody's after? Yeah, when I go to, this place, when I go to the local shop here, the poor guy is sitting there, businessman is sitting there. He doesn't even have a calculator. He's keeping no accounts. He's just basically taking money, giving cash.
Let me tell you what the Mexicans did. Once Videgaray understood that the problem was the small taxpayers. And the small taxpayers were being used as an excuse by the large taxpayers to hide transactions.
Sure.
Most of the cheating is the large taxpayers that really matter. And it actually doesn't matter if you have a shopkeeper who is selling to you and me and doesn't pay the VAT, collects it and keeps it, pockets it. Because it's already been paid. By the time it gets to the shopkeeper, it's already been paid. Much of it. And if he doesn't issue receipts, he cannot enter the business to business value chain.
Right.
So he's out of that. So it's in his interest to keep books for the large taxpayers. So that's the whole point of a VAT. It's self-enforcing, if you allow it to be self-enforcing. And it's not in Pakistan because
But his complaint is that he
the
doesn't
tax
have the.
administrator.
But his
There are
complaint is he doesn't have the wherewithal or the ability to keep those accounts or issue those receipts because he's just a small
Let me
guy.
tell you what the Mexicans did, and then the Chinese also understood that and followed. What the Mexicans did is they understood this problem. They dropped the threshold effectively to zero. So bringing into the net all taxpayers. And Vidigaray did that with one statement before it went to Parliament at the end of 2013. And that was in May 2013. He issued one, he was also Minister for Tax Administration, which was independent, but he was a minister. He said the tax administration has a right to audit any firm, regardless of location or size. So what that effectively did was bring everybody into the net.
Right.
We spent a year preparing packages with simple accounting packages that would be used by people in the business to business world. And they gave them free of charge to anyone selling to business that kept a track of purchases and sales. That's all you do. And then accounted the value added tax that was due. And then, of course, now with digital transaction is done automatically. So the burden on the small taxpayer disappears if you wanted to. Otherwise, it's used as an excuse. Now, you have to align their incentives. It has to be something in there for the taxpayer. If your shopkeeper is going to be subjected to a separate tax regime, regardless of what he does, which is a lump sum tax put on the small shopkeeper, he will never use that system. Why would he do it? It's an additional burden, and it brings him into contact with the tax inspector who demands a cut of his own. So he won't do it, and that's what you've seen last 5 years. But since 2019, you've been pushing point of sales machines and e-filing, and it's done nothing. These are needed, but you have to have the tax policy framework in order for that to work. These are two tools.
My hypothesis is that the FPR, the tax administration itself, doesn't want to do it. Because quite frankly, as you said,
rent to be made.
As you say, digitization, point of sales or whatever, I keep telling them I can put in point of sales in a matter of days. All I have to hire is a security firm, and that security firm will go and put it everywhere, and it'll make sure that it exists. It's a simple contract, no big deal. At the same time,
provided they have incentive to use it.
Exactly. At the same time, you can have the software available, as you said, free for everybody. It should be one software that's free for everybody. And the most important thing that you've dealt with it when you were here, I remember, give people the refund that they deserve. This business of keeping the refund.
If you don't do that, you don't do that. I mean, look, Nadeem, we have destroyed the GST system from the very beginning. The production excises, and then you had the capacity scheme, which was brought in to raise revenues. The moment you do that, it's no longer a VAT, no longer even a pretensive VAT. Then, in order to offset that, you give exemptions. And then you have a revenue hole and you put in more withholding. So
ultimately, the point is these guys want to keep the discretion to themselves because discretion gives you rents, right? What you're saying is you have to have a rule-based system.
That's why you can't find the Kamrul Islam Committee report.
You have to have a rule-based system.
That's why you can't find the Kamrul Islam report. You write a Nadeemul Haq report.
I mean, you know, both you and I have lived in the US. You're still living there. We have to follow rules, period. Whatever you do, I get a traffic ticket if I don't follow rules. And there's no discretion. I get a traffic ticket, period, right? But here, unfortunately, everything is discretion because that's how you make rents. And that's a huge problem. But let me tell you one last thing, then we'll do it again next time, just because we are running out of time. One last thing. Tell me this issue of taxes and growth. Is there a trade-off? Taxes and growth. Because see, the problem is right now, Itisham, let me frame the problem. The problem is we've got 150 million kids under the age of 30. We've got about 125 million kids under the age of 20. We've got 3 million kids entering the labor force. I've been to universities recently and looked at graduate students. Graduate students, unemployment rate is 31%. And graduate students are working for 7 to 10,000 rupees a month. Given that kind of a situation, my view is we need growth rapidly. We need to accelerate our growth very quickly. Now, can tax policy help us accelerate growth, or tax policy will come at the cost of growth? And here I'd like to throw in this thing also. Advanced countries that you've seen, US, UK, etc., are lowering taxes to increase growth. We are increasing taxes according to the international advisors. Does that make any sense?
Yeah, I mean, look, you're comparing apples and oranges. You have tax GDP ratios of 35% and above, and that creates distortions in its incentives, and clearly that's the case. And much of that is direct taxes, by the way. Much of that's direct taxes. The income tax is very high. This payroll taxes, particularly for Social Security, also very high, and that creates incentives for informality.
Right.
Also in emerging markets. I mean, that's Santiago Levy's complaint in the transfer of social security systems from Europe to Mexico and Latin America in general, that you create need for financing, you don't have it, and you put in payroll taxes, and that kills your industry. So his proposal was abolish those payroll taxes and turn to the VAT. Now, why did the Europeans invent the VAT in the first place? They invented the VAT in order to remove the burden on taxpayers, remove the cost of the additional tax cost on export. So basically creating a level playing field. So that's a logic for the VAT.
Right.
What has transpired since they brought in the VAT in the 70s, particularly, then popularized by our colleagues in the IMF, for revenue purposes. But they forgot about the efficiency argument. So you can have a VAT, as we did on imports and manufacturing, but that's a truncated base. For administration, that's what they said, but it was a truncated base made worse by the fact that we were applying it on an excise tradition, which we've always had since the British days. So it didn't actually ever work for Pakistan. Now, coming back to China in 1993 had 2% of GDP, no money for investment, no money for education, no money for anything, defense or anything. And they were really afraid the country would come apart, looking at what was happening in the Soviet Union. So to them, the World Bank was saying, no, focus on investment, focus on SOE deregulation and privatization, as we did in Russia. The Chinese said, no, we're going to start with the revenues. They're going to start with the revenues because we are in a desperate position, and we are going to bring in revenues to be able to finance our investment, to be able to finance our education. And my goodness, have they financed their education?
Great.
PISA scores, the top five, four are Chinese provinces.
Okay, Sham,
by taking it from 10% of GDP to 16, 17% within 5 years, setting in motion growth of double digits for 30 years. I mean, what more evidence do you want? The two go together. You can cut. Okay. You don't have enough money to pay your civil servants today. Debt payments in defense, you're still borrowing. You have no money for anything. So
okay, let me do this. We'll continue this next time. Right now, we've run way over time. So inshallah, we'll do it again soon. Meanwhile, I think let our people absorb this and we'll come back to you. Okay?
Anyway,
thank you very much. Bye-bye.